Good afternoon, everyone. This is James Walters from Steam Power Consulting. And today's presentation, David, if you can bring up the slides, please. Thank you. Is called turning your expenses into a profit center. And it's going to be presented by David Walters, the CEO of Steam Power Consulting. So, David, I'll pass it over to you. And if I have any questions, then I'll pipe in. Thank you.
Thank you, James. Okay, well, thanks for everybody who's joined us on this LinkedIn Live event. I want to give you a little bit of background as to why we have gone down this route. So if you've been on some of our previous webinars, you'll know that we do a webinar called the 7 Phases of the Entrepreneur's Journey. And in that journey, as an entrepreneur comes to the end of their business life and they're looking for an exit, one of the things that we recommend is preparing for a high value exit, what we call a level 3 exit, which is to do the E to P exercise. And the E to P exercise is to look at the major expenses in the business and identify ways that you can turn those expenses into profit centers. That obviously increases the value of the business. It increases the value when you take it to market, and it gets you a better payout. Now, the downside to that is, for that sort of exit, you are often looking at having to create a consortium around your core business. So to give you an example, if you had a large spend on digital marketing, it might make sense to buy in a digital marketing agency, use them for your digital marketing, but instead of that being an expense, that becomes another profit center. Similarly, if you do a lot of event type marketing, if you have an events team, set them up as a separate business group, turn them from a cost center to a profit center, and so it goes on. So the E to P exercise is to identify your 7 biggest cost centers and find ways that you can turn them into profit centers. Now, that obviously maximizes the value of the business, but it's also complicated. There's certainly an increased element of risk, and it adds another 12 to 24 months on the exit plan. So a lot of business owners that we talked to said, well, that's great, but in all honesty, I don't want to invest another 24 months. I want to start preparing my business for exit now, but I would still like to find a way to get rid of my expenses. So the first thing I would say to you is, if you are interested in talking about the more complicated E to P exercise and preparing for a high value business exit, by all means, just book a time to chat with me, and I'll talk you through the process. And you can see the link at the bottom of the screen there to book a time with me. But if you are not really looking at that really high value exit, you've got enough in the business, you want to exit within a 12 to 18 months timeline, then these are some of the tools that we've been able to find which will help you reduce your expenses at minimum effort and minimum cost to still enhance the value of the business. So what I want to do is just run through the sort of tools and systems that we are now offering to our clients to help them increase their profitability at minimum effort, minimum cost to the business. So what I want to do is just break this down into
really quick thing, just to jump in on that, is I think a lot of businesses are saying, listen, I'm not ready to sell, but as some people know, we both came from very large corporate business, and there was a lot of frustration on the internal departments where they were always a cost center, engineering or shipping or something like that, and then they're being pushed to become a profit center as well. Which that was a lot of the frustration we had, is how do we turn this into from a cost center to a profit center?
Absolutely, and that's a very good point. And from the experience that we had, that was quite disruptive to the business, and it didn't always work. So you've got to be careful when you go down this route to make sure that you don't disrupt your core business operations with this desire to eke out the extra few bits of profitability and then damage your core business. So that's why we've chosen these programs, because they are, on the whole, zero cost to the company to implement, and they have minimum disruption. So the programs we're going to talk about, we've got some this month, and we're going to go into another series that we'll talk about next month. But today we're going to talk about programs that are applicable for larger businesses, programs that smaller businesses can participate in, and then we have one which is a very significant payout opportunity, but it is time sensitive. So we'll cover that at the back end of the presentation. So looking at larger companies first, we're going to look at accounts payable automation and shipping automation. And this is with a fintech partner that we are working with now to provide this to our client base. So looking at accounts payable automation, this is where we implement a payment system into the business that will actually turn your AP department, your accounts payable team, from an expense into a profit line. And this is done through the latest fintech automation. In order to get value from this, you really need to have an annual AP of $10 million or more. Typically, this equates to $30 million in revenue, would give you about $10 million in AP. But if you've got $10 million or more in accounts payable, we can implement a system at no cost to you. So that's important. Most of these programs are at zero cost to the client. And what this system will do is automate your invoice process. It will ensure that you get paid faster, and it also reduces fraud because it's a fully traceable, fully validated fintech system. And the big thing is at the end of the billing period, you get a rebate as a percentage of your monthly accounts payable. So this actually allows you, if you've got an accounts payable team, this allows you to redeploy those human assets into other parts of the business where you need extra support, automate your accounts payable process, and get a refund or a rebate at the end of each payment period. And it costs you nothing to implement. The time to implement this system is typically about 2 weeks from start to finish. So it's done. The fintech solution is very, very easy to apply. It's all API driven. There's minimum disruption to your existing IT infrastructure. And within 2 weeks, you can turn your accounts payable team into a profit center and start earning a rebate on your monthly spend. So this is a very, very simple way to actually add a lot of money to your profitability at almost zero effort. So this is one that if you qualify $10 million of annual accounts payable, this is a very quick win, and it brings a significant amount of money into the business very quickly. The other one that we offer for larger businesses is really for those businesses that have a high volume of outbound shipping, outbound packages. So this could be a manufacturing company with a lot of distribution, or a retail business that's doing their own fulfillment and outbound shipping, or even a distribution or shipping company in their own right who want to up their game. So the entry criteria for this one is if your shipping spend is 2 million or more, we can offer you this platform. It's a fully API driven platform. Typical savings to the client is 10 to 20% cost reduction. So if you think you're doing $2 million in annual shipping spend, by implementing this system, you could be saving anywhere between $200,000 and $400,000 a year on your shipping costs. It also saves time for the business. So again, it's fully automated. It's all API driven. And one of the big things, in addition to the cost saving, it's also a significant enhancement for the business because, first off, it's a state-of-the-art system, and it improves the accuracy of your shipping and delivery services. But also that then has the additional benefit of increased customer satisfaction. And if you've been on any of our previous monthly webinars, you'll know that CX, customer experience, is a huge differentiator in today's market. So this is a very simple way. You can save potentially $200,000 to $400,000 a year. You improve the timeliness of your shipping. You improve the accuracy. And as a side benefit, you get a significant uptick in your CX, in your customer satisfaction. And again, this is at zero cost to the client. So it is a very powerful tool, and one that, if you qualify, I would recommend is a very quick win to to add a significant amount of money to your profitability, again, for very little effort and minimal expense.
So something that you mentioned, use example of a manufacturing company, but it really doesn't matter if you're B2B or B2C. Really, all that makes you eligible is your annual revenue, correct?
That's correct. Yeah, there's no other limitation. The entry point criteria is $2 million or more in annual shipping spend, and then we can look at getting you hooked up with this system. So those are the two solutions we have for larger businesses. What I'd like to do now is look at some of the solutions for smaller businesses, which we can offer straight away. So let's go over to that one. So the first one is a credit card audit, and again, this is done at zero cost to the business. The entry point criteria for this is $250,000 a year in processing fees across all your business locations. The audit is conducted at no cost to the business, and historically, clients who have taken up this solution save on average a 28% reduction in their processing costs. So again, it's a nice adder to your profitability. The system reduces your payment processing expenses. It also protects you against future rate increases because it puts the service provider on notice that you are now tracking them, so they're less likely to be able to slide in rate increases. There is a part of the service is constant monitoring of the rates and fees you're charged. The system will automatically ensure that you are getting the optimal rate for your business. And the other beauty of this is you don't need to change your vendor. This is done agnostic of your current service provider. So this is a service that sits on top of your existing relationship and just optimizes that and makes sure that you are getting the absolute best deal possible from your service provider for any credit card processing fees. So again, we're looking potentially at the minimum level. If you just made the $250K in processing fees, you could be looking at $60,000 to $70,000 a year of expense saving, which again, any expense you save goes immediately to the bottom line. So that's a significant kick in your annual profitability. And of course, that profitability would go year to year to year as long as you stay on the program. So again, very simple to implement, no cost to conduct the audit, and it can give you an immediate cost saving on your credit card processing fees. This one is probably the most ubiquitous of the solutions that we are bringing to the marketplace. This one is a tax management system. And to be eligible to benefit from this, you only need one of two criteria. You either have a physical location that you manage or that you maintain, or you are hiring at least one new employee per year, which I think is pretty simple for most existing businesses. If you fulfill either or both of those requirements, then you can set up the tax management system, and this allows you to go in, do a free analysis. So I put the link up at the bottom. You can just go to this URL. You add in a very small amount of business information. The system will immediately tell you what tax credits, what tax benefits you are eligible for. And typically within about 60 seconds, you get an initial idea of how much money you can claim. Now, we've all heard of the IRC and PPP, which were results of COVID. Those are currently on hold, but within the federal government, there are still $2.3 trillion of tax savings available, but most businesses are missing out because they don't know what they're allowed to claim and they don't know what they can do. So this system is designed to be very simple. Again, it is no cost to do the initial assessment. And all it does, it looks at the physical locations that you have. It looks at the number of employees you have. It then searches through its database of tax incentives, tax refunds, tax credits, and gives you an indication within about 60 seconds of what your potential refund would look like. And again, anything that you do not pay in tax is a reduced expense, which immediately adds to your profitability. This slide said it equals revenue. It's actually better than that, because depending on what your margin rates are, whether you're running at 10% gross or 10% net or 25%, whatever your profitability rate is, every dollar of expense that you reduce equates to between $4 and $10 of revenue that you don't need to bring in. Okay, so cutting expenses, whether it's tax expenses, operational expenses, employee expenses, every time you cut expense, you increase your profitability by a significant multiplier when compared to just bringing in fresh revenue. So this is a great way to give your profitability a boost. And if you are beginning to prepare your business for an exit, that most valuations are based around EBITDA, earnings before income tax, depreciation. If you can show that profit kick as you are preparing to get ready for your exit, that dramatically increases your exit valuation on your business. So again, this is another very simple way to maximize your profit, put your business in the best possible light when you prepare for a valuation, and make sure you get the maximum possible buyout when you exit the business. It does say there's a nominal monthly cost. That is if you sign up for the employee tax calculator process. And what this does is it maintains, manages, and processes your candidate, your employee information, and gives you a constant feedback. So as you bring on new employees, it will actually calculate for you the potential tax refund or benefit that you can claim from the government for bringing on new employees. So if you're in an expansion phase and you're bringing on new employees every month, this is a nominal month cost. I think it's around $5 a month, but you can just put every new employee in there. And as soon as you bring them on board, or even when you're preparing to bring them on board, you can work out the value of the tax refund or the rebate you can claim to help you with that hiring process. So this is no cost to anybody. It immediately tells you what the potential refund and rebate would be. So just go to the tax relief calculator URL, put your information into the form, and within 60 seconds you'll know how much refund you're eligible for. So again, that's what I would recommend for every single business. Just go there, sign up for it, and see what money you can get back from the government. Okay, so that's the tax management system. We will continue. We'll look at the next one. Okay, now this is a one-off, and it's going to be a very significant payout to those businesses who take it up. Now, there is a time limit associated with this one. So let me just give you the backstory. Not every business is going to be able to apply for this. This is really for businesses that have been primarily taking payments through Visa and MasterCard. So this is for a business. So I'll just actually read you the court statement, then I'll give you some background. All persons, businesses, and other entities that accepted any Visa or MasterCard branded cards in the United States at any time from January 1st, 2004 to January 25, 2019. So that is the eligibility requirement. And from what we know from the class action administrator, there's about 16 million businesses over that period. So this is going back almost 20 years. And the eligibility period is for the 15 years from January 1, 2004 to January 25, 2019. Now, that's a problem for a lot of businesses because the legal requirement for record retention is only 7 years in most cases. So to go back here, there could be a problem, and this is part of the service this offers. But just let me explain. So the class action suit was taken against MasterCard and Visa for price fixing on their processing fees. The suit finished. The final appeals were heard and completed in the middle of this year. So Visa Card and Master and Visa Card decided not to progress the appeal to the Supreme Court, and as such, they have put $5.54 billion into a settlement fund. The payout will be based on a proportionate share of the interchange fees paid by the claimant over that period. So if you've got a business that's been around for 20 years and you've been doing a lot of credit card processing for your payments, there is a significant amount of money that could potentially be yours by applying for this, by applying to be part of this suit. Now, this is time critical. We mentioned that you must get your claim in before the 31st of May 2024, and with the fintech group that we're working with, their expectation from other class action suits that they've managed in the past is that the payout would come sometime in 2025. Now, you may say, well, okay, that's, I've got 6 months to put in a claim. I've probably got another 12 months. This is your money. This is money that you were wrongfully charged by Visa and MasterCard. It's yours. It's your right to claim it back. And if you don't claim it, somebody else will. So this is money that's just sat there for you to claim back. Okay. Now, because this is associated with a class action suit and a court case, there is a mandatory disclosure. So I want to read that to you now, and then we can talk about how you can maximize the benefit from this. So here's the mandatory disclosure. Although claim forms are not yet available, they are anticipated to be disseminated beginning on or about December the 1st, 2023. No cost assistance will be available from the Claims Administrator Class Counsel during the claim filing period. Class members have the right to file on their own. For additional information, class members can visit the court-approved website at www.paymentcardsettlement.com or contact the class counsel or the claims administrator. So that's the legal statement about this. So basically, in a nutshell, the first 2 weeks in December, the class administrator will be sending claim forms out to the 16 million companies they feel were disadvantaged by this scheme and giving them the right to claim. Now, when you get that piece of paper, you could just sign it and send it in and see what you get, but most people who do that do not get the maximum benefit. And I'll explain why in a second. So hopefully that's given you the high level overview. It is a class action suit against MasterCard and Visa. Anybody who took payments on a Master or a Visa card between January the 1st, 2004 and January the 25th, 2019 is eligible to claim against this suit. Okay. And we'll explain how you can maximize your benefit on the next slide. So I've not seen any. Sorry, yeah, sure.
Just one comment. Obviously, just to kind of drill home, you said MasterCard and Visa only. So obviously, Discovery, those other ones as well, they don't qualify. So it can only be MasterCard or Visa. That's it.
That is correct. Yeah, this is purely MasterCard. So if you were taking mostly Amex or Discovery or other cards, you won't get as much benefit. But still, MasterCard and Visa were the majority, payment processors. So if your business has been processing credit card payments in that 15-year window, there is money there that you can claim. And what we'll do is we're going to show you on the next slide how you can maximize the claim. So with this program, again, this is done at no upfront cost to the client. So what we do is we help you identify the value of the claim. One of the things that businesses fail to do is look at all their subsidiaries or all the different businesses that they're involved with over that 15-year window. And as I said, a typical small business only has a life of 3 to 7 years. So there's a lot of movement within that window. A typical class action suit has an uptake rate of between 30 and 70% of the eligible claimants actually file the claim. So although there's 16 million businesses who are eligible to claim, a lot of those businesses won't be found. A lot of them will not put a claim in for whatever reason. So for those businesses that do put the claim in, there could be a significant payout. So the service that we offer here, we would first of all look for all the eligible business units that you have been associated with that would benefit from the claim. So subsidiaries, various divisions, if you've had acquisitions or divestitures, we would make sure that all of your business elements were included in the claim. Our system reduces the support needed from your in-house staff, because obviously you don't want to tie up your whole accounting department for months and months trying to work out how much you paid in fees from a credit card processing 20 years ago. If a client does not have all the records, and many won't have them going back 20 years, we have alternative methods to substantiate and maximize the claim. And these methods have been approved by the claims administrator. So even if you can't find your records from 2004, there is a system that we have which can help you maximize the claim. We will then prepare, assemble, and submit the claims package on your behalf. We will manage them through the claims process, and if necessary, we'll work with the class administrator to address any questions or concerns to ensure that you get the maximum payout for your thing, for your claim. We'll also provide you regular updates as the recovery process goes on. And then we will review the claim against this proprietary software model to make sure that you get the maximum amount payable, to make sure that it's not been undercalculated. And then we will follow up during the claims process. Eventually, when the claims are settled, when the pro rata payout is agreed, then we'll make sure that you get your check successfully. And we will continue to monitor the court docket to provide you updates on any changes to the settlement process that may happen between now and the end of May, when the filing deadline hits, and then after the end of May until the payout happens. So this is a full service to make sure that you get the absolute maximum benefit of this class action suit, and it applies to any business in the US that was processing MasterCard and Visa payments in the period 1 January 2004 to the 25th of January 2019. So that is a limited time offer, but it's one that pretty much every business that's ever processed a credit card could look at some degree of benefit. Just so that you're aware, that is the website. If you want to go and check this out, that is the government approved. Sorry, that is the court approved website, www.paymentcardsettlement.com. And if you want us to talk about how you can participate in this, then obviously you can contact me, and we'll talk to you about that. So those are the three main systems that we're offering at the moment to help you maximize or minimize your expenses, turn your expenses into profit centers, and give this boost to profitability, especially as you're preparing, or if you are preparing for an exit. So there's several potential quick wins for your business. And next month, we're going to look at another series of expense reduction opportunities, specifically relating to your employees. So again, we'll go into a bit more detail about the hiring tax credits. If you are in a business where you have a high volume of lower skilled employees, so low to middle income employees, we want to talk to you about an employee pay card program that significantly increases employee retention. It increases hiring functionality. It reduces costs for the employer, and it gives a much better financial position for the employees, which increases morale and performance in the business. There's also another program which we hope will be ready for next month. They're just reworking the program to increase the scope, and that is a free pharmacy program that you can offer your employees. And then finally, we'll look at a way, if you are still struggling to bring on the staff you need, we will look at a system where you, if you're comfortable with remote workers, we will present to you a system where you can reduce the cost of your administrative employees by as much as 67%, simply by using remote workers. So again, next month, we're going to focus much more on expense saving around employees. Specifically, we're looking at companies who will be using larger volumes of employees, but more at the lower and mid-skilled rate, lower and mid-income rate. So that's what we have on offer next month. If you've got any questions, obviously contact us, and you can again set up a time to talk with me anytime you want, and I'll be happy to discuss these with you and point you in the right direction. So that's it for this month. I hope you found that was useful.
Perfect, thank you. And I think what we've talked about internally is that there's still a large percentage of businesses and economists are also believing that 2024 is still going to go into a recession. It's dropped, luckily. They believe it's a less chance, but I've been seeing something between 44 to 60% of businesses and economists believe that we're going to go into a recession. It's got better, but it's not down to zero. So, for a lot of businesses, we've been seeing they're not looking to invest this year. They're waiting till next because they're not willing to invest and take on additional cost in their business. But if bringing these services in, if you can save cost, and that then goes into your revenue, it's going to make if we are going into a storm, it's better to weather a storm with more money in your pocket than giving it away to someone else.
Yeah, and that's a good point. I mean, there's a couple of things to bring out in this. Firstly, there's a huge amount of money that businesses are eligible for that most of them do not claim simply because they don't know what they can get. And secondly, as we've experienced, and you're right, talking about the economic headwinds, people are nervous. Typically, a recession comes between 8 and 16 months after the interest rates stop rising. And we're seeing that now. So 8 to 16 months down the road, based on historical factors, we could be seeing a recession. And one of the things we always tell our clients is a recession is not the right time to stop your marketing and your sales spend. That's when you need to be ramping up your sales and marketing. But because they're concerned about their expenses, their revenue, their profitability, they'll cut across the board, and then they hamstring themselves going into those difficult economic times. So one model that I would suggest every business owner should consider is apply these expense savings now to create a war chest so that you can be the one who is investing in sales and marketing, in RevOps, as the country or as the economy does go into recession. Because when all your competitors are drawing in their sales and marketing budgets, if you have that reserve to keep going, you are going to win a much bigger part of the pie, and you will actually come out of the recession much better than when you went in. So that's a strategy that you want to think about. Minimize your expenses now, create a war chest with those savings, and then reinvest that money into your RevOps, into your sales and marketing, while your competition is actually stopping their spend because they haven't got that war chest to cushion them during the economic tough times. So a very good point, James. Thank you. So that's everything for this month, folks. Thanks for joining us. And as I say, next month we will be doing a deep dive in how you can improve profitability, reduce employee expenses, improve employee morale, improve hireability, reduce turnover, and reduce the expense by using the option of remote working. So I hope you found that useful, and we'll speak to you next month. Thanks very much.
Thank you.